if we measure real estate and gold, it's cheaper right now than it was in 1970s. And if you look at real estate, it's so expensive and everything, people, and right now real estate it froze pretty much because the prices are so high. But measured in gold, it's actually quite cheap, which is absolutely fascinating to me. And it shows again that how important it is to have at least a certain percentage of your portfolio within the precious metals sector.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today we have Vlad Grabarskyy, the host of Wealth Building Blueprint. Vlad shares actionable strategies each week, from practical investing and speculation to entrepreneurship. He also offers a comprehensive financial course that teaches independent wealth building and portfolio strategy. Vlad, thank you for coming back on the show.
Steve, thank you so much for having me, and I'm very grateful for the opportunity to speak to your audience.
Oh, you're welcome. Thanks for coming on the show. Okay, let's for those who have maybe they don't know you yet, can you share a bit about your background? What got you started in investing in wealth building?
Sure. So my background is actually in molecular biology, but even at the time when I was in college, I sort of knew that that's not something that I want to do for the rest of my life. So, and around at that time, I learned about the structure of the monetary system. That's when I sort of understood that, okay, so I'm working really hard, I'm being productive, but my productivity is being diluted without my control. And that just did not stood well with me. So I began learning more about silver, the precious metals, commodities, and everything. And that's sort of how I got, involved with this world of finance, pretty much. And right now, Steve, I think if you look at the macro economy, we have so much happening because we have the Fed in the middle, but then we also have on one side, we have deflationary pressures. If you look at the debt levels, they're absolutely phenomenal. They're off the charts. So that's deflationary by default. But also, if you look at the bubble, I believe the stock market in the US is in a bubble, especially the AI sector. And that's also deflationary, right? Then on the other side, we have the currency that's being diluted constantly. We have the governments who try to avoid recessions all the time, because the way I look at recession, Steve, is like a normal cycle, right? We have summer, we have winter, and that's normal. But I feel like right now, because the governments want to avoid that, there is this inflationary situation as well. So I think we're in the middle between the two sides, and that's what I'm mainly interested in right now.
Okay, that's an interesting way to put it. Like there's natural cycles to the earth, spring, summer, fall, and winter, and it seems like the Fed is trying to keep us perpetually in the good weather of spring, but eventually you got to face the music, and winter's got to come.
Yes, that's exactly right, Steve. And so these will be the main things. If we look at the current economy, so I do money interviews as well, and some people believe that the interest rate should go down, others believe they should go up. And it's a difficult situation because right now Trump is putting pressure on the Fed. And if you look at the recent economic data, I believe there are signs that we are sort of slowing down. And it would make sense in that environment to lower the interest rates. But again, on the other side, it's just, it's very difficult to understand where we're heading. And that's why I'm a big believer of making sure you look after yourself first. It's completely fine to understand economics, but I like to put it into the context. What does that mean for me? And I mean, I believe that right now it's really important to hedge against the deflation, hedge against inflation, and we see that the main hedge, which is the gold, is doing really, really well. So that again brings the importance of having, I suppose, a diversified portfolio, because a few years ago no one would hold gold. Right now it's becoming more and more prominent with people. But yes, I think portfolio structure is unbelievably important in the current environment.
Yeah. Okay. So you were saying to have a hedge on inflation and have a hedge on deflation. What are some hedges you could place there?
So what interesting enough, gold can be both, because we know that gold performs actually really well during deflation. So a lot of people don't really talk much about that, I think. But historically speaking, when we have collapses, when we have the crashes, of course, when everything goes down, people have to sell, gold goes down as well. But then it begins to perform because it's that safe haven that people are looking for when things are bad. But during inflations, we can see that miners are a little bit different because inflation can affect the miners, but I think the actual, as a long-term protection against inflation, gold works really well, and we can look at that historically. And I love talking about this chart, Steve. If we measure real estate and gold, it's cheaper right now than it was in 1970s. And if you look at real estate, it's so expensive and everything, people, and right now, real estate is like, it froze pretty much because the prices are so high. But measured in gold, it's actually quite cheap, which is absolutely fascinating to me. And it shows again that how important it is to have at least a certain percentage of your portfolio within the precious metals sector. So just to answer your question, Steve, yes, I think gold is really important, but I think cash is important too. I mean, like Rick Rule likes to say that cash is an option premium. And that's true because we are living in an environment where we did not have a crash for a long time and the markets have been going up. But that has to change someday. And I think it's to have 5, 10, 15, maybe 20% of your portfolio in cash. There is nothing really wrong with that if you believe that we are nearing the peak, if you believe that the economy is slowing down. So I feel like these would be the two main asset classes that I would be looking for.
Okay, cash and gold. All right. Um, let's see. Okay, so we basically talked about gold. Maybe go into silver a little bit. How do you see the role of these two metals? Today's environment. I'm leaning towards more inflation today than deflation, but maybe we got some deflation coming. Digital currencies, central banks seem to be still hoarding gold. Maybe incorporate silver in there as well.
Yes, so central banks are definitely getting involved with gold. And I pay a lot of attention to this deglobalization that's happening right now. And I feel like it's definitely happening, which is why central banks are buying gold. Also, when Russia invaded Ukraine, the 300 billion of their assets were frozen. Now, I'm not talking from the perspective that's good or bad, but purely from the trust in US in dollar, that obviously is not good. So that if other countries like China, other countries like, anyone who would not agree with US or potentially are thinking of doing something that US would not be happy with, would be thinking, well, maybe we should diversify in gold. I think that these play a big role in gold. And also, Steve, it's funny, but I don't think that I've ever met a real person in real life who talked about uh, the mining stocks, gold mining stocks, which is like I'm in this war. I talk to people and everything, but in real life, none of my friends care. And I think that's a good sign because, usually near the end of the bull market is where everyone wants to get involved. So that shows that potentially we still have a lot further to go. So I like that. But to answer your question on silver, I also have, guests who believe that silver is no longer monetary metal, it's completely industrial. I still feel it tracks gold a lot. So I mean, like, from that perspective, it's at least, has some relationship to that. But yes, I think in silver, the fundamentals are more important. If you look at the big picture where, the big thinkers want us to go, we need a lot more silver. We need a lot more of everything, of energy, copper. Like we can talk about that if you want as well. But on silver, the fundamentals look really good. And I feel like that the historical trend of silver performing really well near the latter stages of the bull market is interesting. It does not, of course, mean that this is what's going to happen 100%, but it is there. So I believe, it's important to keep that in mind as well. But yes, I'm personally very interested in silver. I have been buying physical silver since it was about $14, $16 per ounce. Right now, I'm not buying physical anymore. That does not mean I do not believe the price will go higher, but I just believe that I have enough and the risk to reward right now maybe, it's not skewed too much to the upside. even though I do think the price will go further. But the mining stocks, they're very interesting. I feel like even at the current level, Steve, the good companies are printing cash. So like before, we used to think, okay, I'm buying miners because I believe that the commodity price will go higher. Right now, I feel like we are buying the miners because we believe that they're undervalued relative to the money they're printing already. And I think that's a big and very important shift. And if we get higher commodity prices on top of that, that would be great too.
Yeah, it comes to that. I don't think I've ever heard any of my friends talk about any gold or silver mining stocks. So yeah, I remember when I got into Bitcoin way early, under 500 bucks, and when it made its first run to 10,000, I remember everyday people talking about Bitcoin, and that was my first sign is like, hey, I need to trim my position. This is when I was talking about it when it was less than 500 bucks, everyone told me I was crazy. Now the taxi cab driver's telling me that I should buy some. Probably time to sell. Okay, how about you know what? Do you have any favorite gold or silver miners you want to throw out?
So I do, but before that, I will just explain how I invest into the mining sector. So I have three buckets. I would have the first one would be the majors pretty much, or big royalty and streamers. So that's the Pan Americans, Franco Nevada, Wheatons, all of these, the new ones. Then in the middle, I would have either developers or it would be small royalty companies. I'm a big fan of these small royalty companies. We've seen what happened with Origin, they got acquired. We look at companies like Kennerland, companies like EMX royalties. They're all interesting. I like them a lot. And then I have the junior bucket where I would have about whew, 18 to 20 juniors. They would be more speculative, of course, more risk, but that's also a bucket that I sort of selected myself and watching quite carefully. But I feel like Steve, right now we are moving from the point where the big companies they perform. So I feel like right now maybe some of that money will trickle down to these middle companies, so slightly lower on the quality scale, but they could be still quite undervalued. So these would be sort of the things that I'm looking for. But yes, the small royalty companies, they did go up by a bit now. I'm very happy with the performance. I'm not sure they're as attractive right now, but certainly there's nothing wrong by also having the big guys. Like we've seen how well they're doing, and I feel like some of them could be still undervalued even at the current commodity price.
Yeah. Okay. Okay. Let's move on to uranium. Uranium's pretty volatile. How do you feel about uranium at the moment?
Um, so I got involved with uranium steel in about 2019, 2020. So I did feel much comfortable then, even though Steve, to be honest, if we look about it, I think the risks are lower. So back then it was more a question of, yes, it's unbelievably cheap, but could it get worse? And it could for a while. But right now I feel like, yes, of course, uranium is now what, 70, 75 to 80 dollars per pound, but it's people are way less, they accept it more than they did before. So that's good. Because the hate was unbelievable back even in 2019. No, nuclear was seen as something quite negative. I feel right now people accept it as a part of the moving towards the renewable energy. And even though I believe that we need more of everything, so we need more coal, energy, and everything. Because if you think about, look at these data centers, they're investing so much money into that, and that obviously needs to get fueled. And if you look at the growing population in developing countries, they need a lot of energy, they need a lot of copper, they need a lot of everything. So from that perspective, I think we need a lot of everything. But uranium looks interesting. I own a lot of, well, not uranium would be quite a significant part of my portfolio, but there are about 8 companies that I have. So much less amount of companies that I would in the precious metals. But yes, I believe right now it had a good run, right? So I wouldn't be buying right now. And I feel like there will be pullback. But I think the long-term contracts, they give us a lot of confidence. They sort of put the floor on the future price. And even though if we get a big collapse and big stock market bubble burst, then of course everything's going to go down. But I think for the long term, Steve, it looks really, really good. And some of the companies, the no-brainers like Next Gen or what's the company? What's the company, Steve, that acquired Fission?
Paladin.
Paladin, exactly. Paladin, I really like. Denison Mines as well. So I feel like there's a lot of good companies, but I don't think the risk to reward is as good right now as it was before. So I would just wait for now, personally.
Okay. Yeah, Liberation Day was a nice gift in uranium equities. About what percentage of your account do you have in uranium and uranium stocks right now?
So I would not be able to tell you exactly, but I would say I always try to keep close to 15% in around that area. And then I would also have, of course, some physical gold and silver. I like to have some cash in my investing account in case we have opportunities. And I also have to have a certain amount of cash outside of the system in actual cash. Now, some people will hate me for that because there's so much, we have inflation. How could you be keeping cash? But again, that's part of hedging my portfolio. Is it possible that we have this huge collapse and everything where the bank shut off? Sure, it's possible. So why not have a certain percentage? I mean, it's a small percentage, but outside of the system as well. So cash, then uranium, then big companies with, I like copper as well, of course. So I would have these like Freeport, McMoran, Vale, and all the big guys. They're interested, even though I'm not as bullish on copper right now. I feel like for the long term, it's very interesting, and I like to look at things for the long term to find this huge trend, get in early and sit tight. I mean, I think, Steve, one of my worst traits is that I find it difficult to sell. I'm completely comfortable buying the stock, seeing it down 50%, be happy and buy more if I believe the trend is going where I want it to go. But for me, maybe it's personality thing. It's much more difficult to sell. But I have certain rules where if it reaches a certain stage, I just sell and I try, to not feel too bad for myself.
Yeah, yeah. Yes. I think selling is actually harder than buying, for me personally. But yeah. Okay, let's do a quick one on copper. You brought it up. Go ahead and give your macro thoughts on copper.
Yes, so again, copper is used in absolutely everything, right? It's used, well, so if we want to, and we are saying that we want the world to be a better place, we want to electrify the world and everything, we need more copper. So that's bullish. And also, Steve, if you look at the mining business, we didn't have a huge copper discovery for a while, like one of the big ones. And also, it takes so long to get the permits. Now, it is possible that in the future they will, short the process down and everything. That's all possible. But as of today, it takes a very long time to get mine to production. The demand is going up. The supply is not going up that much. So I feel like completely from the fundamental perspective, it looks bullish for the next decade or even further than that. But right now, Steve, I'm really nervous about possible collapse of, well, not collapse, but fall in the stock market and equities, and I believe that could bring some deflation because with that much debt and with that much overvaluation in some of these stocks, if that bursts, like we will get deflation, I feel, and copper does not like deflation. Now, the thing is that governments fix deflation with more inflation. So if I feel like if we get deflation, they will print, increase the empty money supply, and then that would be bullish in theory for everything, right? In terms of measured in dollars. But I am nervous about that little much, but I still own those mines as part of my portfolio structure for the long term.
Okay. Alrighty. Yeah. So you could see maybe in the short term us having a correction in copper and copper equities simply because the market is overvalued and it's probably going to drag those down with it. Copper does not do well in deflation, so that could forecast a pretty good correction, but it's not enough to keep you from owning some copper equities at the moment.
Yes, that's exactly correct. And I feel like a lot of these companies, the valuations are quite attractive. So I'm just willing to accept that risk of, of maybe being run for a year or two. But then for the long term, like if that happens, I do have some cash that I can implement. So I would be actually quite happy if does occur. I think, Steve, I was more comfortable when silver was $14 and it is at 41 today or whatever that is, from that perspective as well.
Yeah, yeah. Yeah, the silver price doesn't need to go up for these silver miners to make money. They're already making plenty of money as it is. Okay. Can you share a lesson from a missed opportunity or a mistake that shaped how you invest today?
That's a good one, Steve. Missed opportunity. So the one that comes to mind, I think it was in 2022. Remember when Bitcoin went down to 16,000, in around that area? I had a buy order set at around 16. So I think I was just short a few $100s, and it just didn't hit it. And then you know what happened with Bitcoin then. So that was, now I actually don't consider that mistake. I consider that a good thing because I was disciplined. But on the other side, I sort of knew that the price was likely to spike at least as a big rebound, but I never got involved. So that would be one of the recent ones. But I think, Steve, as a macro thing, I believe that people need to understand that saving in cash is a big, big problem. That was a big deal for me. That was like the spark that made me really get interested in this financial world. And if you look at the system before 1971, at least the currency was backed up by something, it was backed up by gold. Right now, the governments can do a variety of different financial gymnastics to achieve whatever goal they want to achieve, and they're in control, you're not. So I'm a big proponent of converting your productivity, so your cash, into tangible things that cannot be printed. And these things don't have to be gold or silver. They can be companies in a variety of sectors. They can be land, real estate. You can collect Rolexes if you want, playing cards. Of course, you need to understand them well, to get involved. But I feel like that's a big deal. But with that being said, Steve, I feel like it's also important to have a certain percentage of your wealth in cash because you never know what may happen, and you may get a great opportunity. And if you have cash with you, you can benefit from that as well.
Yeah, yeah. Okay. I can definitely see that. I that was a mind shift for me too, a few years ago, when silver spiked around COVID, and it went from, I don't know, $14 up to 38 or something, and it seemed like a few days. My buddy was telling me, he's like, "Hey, I got these bars of silver. What should I do with them? Silver's up to 38 bucks an ounce." And I'm like, "Wait, you have bars of silver?" And he said, "Yeah." And then when I took a look at them, I'm like, "Wow, this is kind of cool. They feel neat in your hand." And he's like, "Yeah, it's just another way to store cash." And that's when something clicked in my brain, and I was like, "Okay, I need to investigate this because like there's something I don't understand here. This guy has bars of silver that he's holding on." Um, okay, if we fast forward to 5, maybe 10 years, what commodity or sector do you think could completely reshape the investment landscape?
5 to 10 years. Well, I see gold doing really well just because of the structure of the monetary system. So I'm very much interested in gold. I think silver will do really well. I'm not sure about Bitcoin. I think Bitcoin can do really well. I think it can go to, a few $1,000s. I don't know. And why, Stu? I think because the governments have control on what can happen to Bitcoins. And I'm not sure if the governments and Bitcoin getting closer is a good thing, necessarily. I'm not saying it is or it's not, but I feel like there would be a lot of risk with Bitcoin. But with that being said, I don't see anything wrong with having a certain small percentage of your wealth in portfolio as well, just as a portfolio diversifier, because you never know what's going to happen. Um, but just to answer your question, I'm not sure. I feel like the mining stocks could surprise a lot of people. Because if you look historically, gold had these periods where it went up 800%, and the mining stocks don't even better. So I feel like because personally, I don't think miners up until today have done as well as we expected them to, let's say 2 years ago. If someone would tell me, I think even like 2 years ago, gold was in around what, 1680? I think that was the low. If someone tell me gold will be at 3500, I would say the miners would be up 4x, 5x. Like in general, if you look at the GDX, that's what I would think at the time, because that price would look unbelievably high for me at the time. So I feel like miners still have a lot of opportunity, but I think it's important to pay attention to the costs, to the inflation, because that could be a problem. During bad times, do people work hard to make sure their balance sheets are good? And that's what we're seeing right now, because the miners just went through bad times. Their balance sheets are quite good. So if in few years of good times, I have a feeling their balance sheets could get much worse. So then that would be a good time to pick the good ones, and I still believe they could perform really well. So that's really what I have in mind.
Okay, so gold, Bitcoin, and mining stocks. All right. If someone's new to commodity investing, give them three principles that you would tell them to stick to?
Sure. With commodities, I feel like it's important. The first thing is look at the trend. So you would look at the supply, demand, and everything. Understand the big picture. If you find that the trend is going, in the direction where you want it to go, that's the first thing. Then you need to decide how much work you're willing to do. If you are not willing to do too much work, maybe you can just, speculate on the actual commodity. You can buy paper if you want, or you can buy physical in case of, gold, silver, or whatever. Hopefully not uranium. um, but yes, and then if you are willing to do more work, I believe the miners could be a good option. But then even here, you can segregate into how much work you're willing to do. If it's just little bit of work, you can buy the big names. If it's more work, you can look at developers. But then your expertise also needs to be broader, or you need to understand that you are taking much higher risk than you think you are. And then with the miners, it's even more. So I think it's just understanding where you are educational wise in this whole situation, and then look at the big picture, and always use the bucket approach as well. I think that's unbelievably important, because you can buy the best story and something can happen with the mine and you're going to lose all of your money. I think the recent example, I don't mind mentioning my losses as well. I invested in Peninsula in uranium sector. That's down like 90%. So, but because it was one of my, 9 at the time stocks, it's not a big deal. You take I would actually use it during the tax loss season, to pay less tax. So it's losses are part of the game. Bucket approach is really important, and understand that the deeper you go, the more risks you have, and the more expertise you would need to have also. That's what I would say.
Okay, so basically understand the trend, and invest in things that have a decreasing supply and increasing demand, or something that's going to forecast that, okay, people are going to want more of this in the future. And then it really comes down to how much work are you willing to put in. The bigger the name, they've been around for a long time, there's less work to do. The smaller the name, the more risky it is, and the more you need to understand, and the more work you got to do.
Exactly, exactly.
Okay. Um, okay. What's one trend right now that you're following that most investors aren't paying enough attention to?
One trend that I'm following. So I did mention deglobalization. I think it's important for the dollar. Um, but overall, I think the commodity sector, I think there's a huge trend, because we need a lot more commodities and energy. I don't think we talked much about like oil and gas. I feel like now I wouldn't be as competent with these as I would be with like uranium and precious metals, because that's where I would put most of my attention. But by doing a lot of interviews myself, talking to some people, you know, they would be also near time cautious about these two. But for the long term, I mean, it looks like the demand will peak, in many, many years from now. So that's interesting. And again, it comes down to this trend of data centers, this trend of more energy, more commodities, more mining. And as you have mentioned as well, Steve, people are not paying attention. Like, we don't hear people talking about precious metals, never mind copper, never mind zinc, never mind cobalt or any of these. People don't really care about that. And I think that's a good sign. I think that means that few people who are interested in these things, they could make potentially really big profits. So yes, I'm paying attention to that. But also as a macro trend with the economy, I feel like most people are still saving in cash, and I think that's a big problem. Now maybe that's just me, but I don't really have anyone around me who would be interested in investing and buying assets and these things. They're working at a normal job, saving in cash, maybe getting a mortgage, and that's completely fine. But I'm just more about they would save cash and they would keep cash, and every single year that cash loses money. And yeah, I'm a big proponent of converting that cash into something physical.
Okay. Yeah. Yeah. Over the last few years, I've kind of taken the same approach. I look at cash as a hot potato. And, if you can, even the Sprott Physical Uranium Trust, I kind of look at that as volatile cash, just like I look at physical gold or physical silver as volatile cash, or even physical copper, like something other than currencies, which are just getting printed away, is something that I think you're right. Most people aren't paying attention to. Okay. Anything I should have asked that I didn't in any thoughts?
No, I think Stu, we covered a lot. So these will be sort of the things that I'm paying attention to: the big picture, the commodity trend, the cash. I think we covered a lot. So thank you very much for having me, Steve. If your audience would be interested, I have a channel, Wealth Building Blueprint, where I also do similar interviews to what you do. I do some solo videos where I explain certain topics as well. I do have a course, Wealth Building Blueprint, if anyone would be interested as well. It's more for people who are maybe not that savvy, for people who are still trying to learn about it, but it's a very comprehensive course. I have money back guarantee as well. But that's everything, Steve. Again, thank you so much for having me.
Yeah, you're welcome. Your channel's really taken off. You've had some big names on there, and I like it a lot. So I'll put your links down below, and I would recommend that you guys check it out. So thank you for coming on the show, Vlad.
Thank you very much, Steve.
And thank you for tuning in. Go to stevebartonmoney.com for more, and have a wonderful day.